Hi guys, welcome to another day of this YouTube mentorship. I think we're in day 22. This day 22 or thereabout. Yeah, I think the day 22 because we had two sessions yesterday. So please go through those last videos if you haven't. Right, those videos are very important because they set up the foundation for what we are doing. Right, it's a continuous mentorship. Right, so go through the last videos. Welcome to this. If you're just watching this, if you're just coming across this channel for the first time, this is Elektron FS Academy. Yeah, we focused on trading lectures um for free, of course, or here on YouTube. You can just do it to go through our playlist and all of those fun stuff just to get familiar, right? So that's what we do here. We teach for free, and we give value for free, right? So if you are just coming in, do want to start from the day one of this YouTube mentorship. The playlist has been updated daily. So I think I might have to go through the playlist one more time to make sure that no video is missing out from the playlist. All right. So I'll just do that maybe after this video. All right. So let's talk about risk management because this is one of the topics that a lot of mentors avoid. A lot of mentors avoid talking about risk management. Right. Talk about if fail to talk about this. Right. They fail to talk about this. Why? Because I feel like the reason they do this is because this was one of the topics that is not so, it's not so, I don't know how to put it. Risk management is a topic that is not so, I don't know, though, it's not so shiny, right? Telling someone that the person is going to lose money, but this is how to manage it, it's not something that many people want to hear because, the community, they want to make money from the market, but they did not want to lose money, right? So when you're talking about risk, all this kind of stuff, many traders are always like, bro, I came to make money. I didn't come to lose money, right? But the truth is that if you're a trader, it's not possible for you to make money consistently without losing some at some point, right? Just like the bullish markets depicts, right? Even a consistent trader faces of drawdown, right? A consistent trader faces of this is how the equity of a trader is, right? It looks like this drawdowns and then move ups, drawdown. But a YouTube trader or a newbie expects equity to look like this, right? So a newbie expects his equity to look like this, just straight up, right? That is not the truth, right? You can't just be having wins that way, right? You cannot just have wins. If you take one trade, you win. Your equity, maybe assuming that down here you have, let's say you start with, let's say you start with $1,000, right? Start with $1,000. Many people believe that the equity will just be straight up, like every day they're taking wins, right? Start with 1,000, and then you think that maybe you will take wins from 1,000 straight up to, let's say, 100,000, right? This was many traders think that trading is about, right? The thing that is like this, you just make your, it doesn't like the equity will look like this. You just start the $100 account over 6 months, they're up 100K, and every day will be a win. That's what many traders think that trading looks like, but it's not that way. It doesn't look like that, right? Trading doesn't look that way. That's not the reality of trading. There are going to be times in which your strategy does not perform well or fundamental level. So, what to expect is your equity to look like this, right? It might go up, maybe drop down a bit, go up again, do this. This is how your equity is going up. So you have to be very patient with it, right? And then finally, you might see your equity go up, right? So to hit the 100K. This is what a real equity looks like. You're going to have times in which you have consistent wins. At times you're going to experience losses, right? At times your equity is going to be ranging sideways, up and down, up and down. And this sometimes it's not really because of your strategy. It's because of you. Sometimes, for instance, now you might have a bad news or something happened. Maybe you're busy at work. You have an exam to prepare for. You lost a loved one or something that was out of your control happened, and that thing negatively impacts your trading account, right? You might, something, maybe you need to pay your school fees, you start to aggressively trade, or you just become careless or something of that sort, or one of these Twitter influencers, make you to start over leveraging because of their flashy lifestyle. That is what happens. This is the reality of trading. This is the reality, right? Your equity, even for me, I do experience this, right? Even the accounts I've made withdrawals from prop accounts and all of those things, even my personal accounts too, I experience this a lot. So, like even as I'm speaking now, in fact, most of my accounts I'm in drawdown, just one that's in profit. Oh yeah, just one. Most of my accounts are in drawdown, right? They are 1% drawdown, 2% drawdown. This one is even down 6%, right? So I've never been the mentor that will come and tell you that I don't lose trades. I've never been that one. I always tell myself that I do have losing trades. I do lose prop accounts. Sometimes I need to. Sometimes I do take losses that I need to top up. Like if I have $1,000 and maybe it's down 400, I might need to top up maybe from my other income sources. But that is the reality of trading. The goal is to make money, right? It's not to be the best trader, right? So that is what basically it. You're in a competition with yourself. Don't compete with Twitter traders. So most of these people on Twitter, they're just posting one side narrative. You see someone flipping accounts every day from $10 to 1,000 every single day. He never shows you the times he take losses, right? So I don't, you just have to be you just have to be aware that trading is not rosy as it seems, right? You have to incorporate risk management because it's risk management that will keep your accounts rolling after all these periods. If you're good at managing your risk, your accounts will always go up. That is the guarantee. The guarantee is that if you're a good risk manager, right? If you're a good risk manager, the guarantee, right? If you're a good risk manager, the guarantee is that you would, this is a guarantee. Your guarantee is that your accounts will go up. That's a guarantee. But how long will it take? That is what is unknown. The time is not known. How long will it take? That's what you don't know because you don't know how long, this up and down movement is going to take. But there's a guarantee that your account is going to go up. The guarantee is that if you're a good risk manager and you have a working strategy, right? The guarantee is that you're going to be profitable in the long run. But how long will it take? That is not known, right? How will it happen? Just keep managing your risk, right? So that's the essence of risk management to keep your accounts going up on the long term, right? Not short term, right? So you're going to sometimes, I know traders that sometimes you might even have a losing year, right? I think this guy, Umar Ashraf, was telling us how a particular year that he made the most money. He said that from January down up to around September or thereabout, he was on a loss. But from the last 3 months, he was able to recover everything and still make profit for the year. So imagine that you're trading now, and the first 6 months of the year you have been taking losses. Maybe your account set to $1,000. The first month you're down 100, second month down 100, third month down 100, fourth month down 100, fifth month down another 100. Your account is now down to $500. 6 months like that, your account keeps going down, and then suddenly in the 8 months you now start making profit. You now recover maybe your 100 back, recover 200, and then by the end of the year your account that was $1,000 is now at 2,000 despite the drawdown. That is the reality of trading. If you're good at risk management, you just have to be patient enough to weather the drawdown. I know I'm taking my time to say this because a lot of people have wrong perspectives about trading. I'm just taking time to state this thing over and over again because you need to understand that trading is not automatic. You're going to encounter losing trades. That is a guarantee. You're going to have times where you take losses. It is okay, right? You're going to have losing months. It is okay. You're going to even have losing years in some cases, like a whole year you lost. That is okay, right? So that is the power of risk management. So in the long run, if you're going to stick to your plan, then now I want to put in before I start going to the nut and bolt of risk management. One last thing I must put in place that you must have what a secondary or let's say a second income source, right? This is very important because your risk management will not be important if you are depending on only your trading account, right? You have to have a second income, source, especially if you're beginning, right? You don't have so much net worth, right? It's always good to have a second income source. Now, let me ask you a question. What happens when your bills come up while you're in drawdown? What do you do? Let's assume that your only means of income is trading, and your only means of income is trading, right? And then you now encounter what? Encounter losing trades and your account is down to 600, are you going to withdraw from the account or what are you going to do? Just think about it. What are you going to do when you only depend on trading and your account is in drawdown? Are you going to withdraw the remaining there? How are you going to, you've not even made profits. How are you going to pay your bills when your only source of income is your trading account and you're in drawdown? What are you going to do? So if your guess is as good as mine, you can see the importance of what having a second income source. The second income source may not be so much, but at least you should be able to pay for your basic amenities. Like what are the basic amenities? What are the basic things you spend money on? Right? Food. So your second income source will be able to pay at least for your food, at least for food, electricity, water, all those things. A lot of times mentioned so food, your transportation, your rent, all those important things are very important. That's what the second income source is for. Your food, your rent, your school fees, all those things that are very essential that you can't do without. Right? You should have something else to cover it. And the best part of this generation is that we live in a technological age. We live in an age where you can make money remotely. That means you can make money online. This is one of the best things about this generation, right? Even if you don't, even if you're not able to get employed anywhere, right? You're not able to get a job or land a job anywhere. You can go into remote businesses. You can be a graphic designer. You can be a content creator. You can be a moderator. I think recently, this platform called CK Capital, they were looking for what? Community moderators, and the pay was as minimum as $250 so this a month. So the minimum pay I saw was $250 a month. As a Nigerian, $250 a month is a lot of money. Imagine when they're paying you $250 a month, right? So I couldn't even apply because I have a lot of things doing because I can't be on my phone for 12 hours, 8 hours a day. No, I can't. I don't have time for that because I have a lot of things doing. But if you really want to do this, right, you can go for this kind of jobs, right? Community moderator, virtual assistant, social media manager. You can even teach things online. Maybe you know how to cook, you can have a cooking course. Maybe you know how to dance, you can have a dancing course. You can open a YouTube channel. Make videos on gadgets. A lot of things to do. Make little videos on fashion. You can even make a channel on how to do home things like how to change a bulb, how to change your car tire, all those things that people find difficult to do, how to knot their tie, right? So many men don't know how to knot a tie. And believe me, if you make a video on how to knot the tie, believe me, you're going to have a lot of views and then YouTube can pay you. So there are a lot of things you can do to have that second income source because that second income source is very important. This is one of the reasons why I am profitable now because I have a second income source. When I was depending on only trading, it was difficult for me. I'm just telling you guys this for free. When I was only depending on only trading, it was very difficult for me. Now I have other things. I have a physical job. I have partnerships and other things I do that gives me side income. So I don't really depend on my trading account. Although I do need the money from trading, but it's not like if money does not come from trading, I cannot survive. But I can survive with or without my trading account. But sometimes it limits me because the trading account is actually where the bulk money comes, right? So you also understand that. So I'm just being very truthful with you. So you guys can understand the need for risk management. Very important. Now let's talk about risk management properly. Now, risk management is very, very simple. What does it mean? It simply means that each time you take a loss, your loss should be less than your win. So the whole summary of risk management, right? The whole summary of risk management is just simple, very simple summary, right? Very simple summary. As you lose less, just a simple and these are the simple summary of risk management. Lose less and win more. That's all. You lose less and win more. That means whenever you take a trade, you're losing 1 hour. Whenever you're winning at least. When you lose, right, you're down minus one hour. When you win, you're upwards at least 2 hours. This is just what this one is all about. So whenever you win at least 2 hours. So it's 2 times what you lost. That is just it. So now you can see that if you take 10 trades, let's just do this. Now if you take 10 trades, right, and you lost this, right, you lose this. That means you're down what 6 hours. But if you out of the now losing 6 means that you won 4, right? Of course, break even also falls as losses, right? If you break even, it's not a win, right? So now imagine that you won 2, you won 4. That means 4 times 2 was up 8 hours. So you can see that at the end of the day, your net profit is what 2 hours because 8 hours minus 6 hours is what 2 hours. So your net profitable at the end of the day. So you say you're in your net positive net 2 hours. That is the power of risk management, right? You can say that you took 10 trades, you lost 6, you won 4, you're still up net profitable. You see that you're even losing more than you win, and you're still profitable. That's the power of risk management. Now imagine that maybe you target 3 hours in your trades. Target 3 hours in your trades, right? You target 3 hours for each trade. Now you lose the same thing too. You lose 6 and win 4. If you lose 6, you're down 6. If you lose 4, if you win 4, 3 times 4 was 12. So because that's 3 times 4 is 12. So that means 6 times 6 was you're upward 6 hours. So that if you take if you're targeting 3 hours, that's 3 times what you risk on your wins, and you lose 6. You can see that now let's assume that, okay, you lose 7. Right? You're losing 7 at once. Okay, assume that maybe you lose 7. You're down was 7 hours, and then you win 3. Out of that 10. Now 3 times 3 is what, 9, right? So that means you're what? You're up what, 2 hours. So you can see that you took 10 trades, you lost 7 and won 3, but you're still what, positive. That is the power of risk management. That is the power of risk management. So that is it. So for a 1:3 system, you should win at least 3. So you have to test your strategy, back test your strategy, and be sure that at least, it's very important. This is very important now. It's not just risk management. Back test your strategy and be sure that your strategy gives the strategy gives at least um the strategy gives, let me make this into a show. Right. So just be sure that your strategy gives at least, it gives at least one, at least 30% win rate. So for a 3 hour system, you should be having at least a 30% win rate, right? That is what you should back test on. So back test and be sure that your strategy gives at least 30% win rate. Then if it's in 2 hour, your strategy should give you at least, should win at least 40%. That is the minimum, so you can profitable, right? So this is the minimum profitability, right? So this is the minimum profitability. So you have to check you have to back time, be sure that you are having 30% of your trade, you're winning 30%, right? If you are using 2 hours, be sure that you're winning at least 40%. It's very important that you check how many percent. And of course, you should know that if you're using a lower RR, you should have if you're using a lower RR, like 1:2, right? It's more easy to hit 1:2 than hit 1:3, because a trade can easily go to 1:2 than 1:3. Sometimes price reverse at 1:2.5, 1:2.7. Find the high RR you use most times, not all the time. Most times, if you use a very high RR, your risk management is your win rate is going to drop. So most times, higher RR leads to lower risk management. So note that, and most times, higher RR usually leads to low win rates. So, and that is still fine. It's still very fine. So let's assume maybe you use 1:5. So assume that you target 1:5 for your trades, right? Let's assume that you target 1:5 hour, and it's 1:5 hour. So now you win, you take 10, then you lose 8. So that 8 hour, right? And after the 10 trades, you win only 2. Remember, 10 trades, lost 8, but you won 2. Now, if you win 2 5 hours, so what? You're up 10 hours, right? So you see that 10 minus 8 is what? 2. So you said you still was up 2 hours. So you can see that 1:5, despite having an 80% lose rate, right? You lose 80. If you take 10 trades, you lose 8. If you take 100 trades, you lose 80. So you're used to losing trades because of 1:5. So you can see that if you have a high win rate, you have to get used to losing a lot of trades, because most times price is going to reverse on you. But if you're very good technically, of course you can always increase your win rate with your back testing and strategy, right? So for a 1:5, if 1:5, you need at least 20% win rate, right, to be profitable. At least 20% win rate. That is the minimum, right? 20% win rate, right? So you just have to check your strategy. How many hours we use? Right. For me personally, I use at least 1:2. I do 1:3. I don't really have a fixed one, but my minimum is 1:2. Right. I use 1:2 at least. Right. Minimum. If I take a trade, it must be at least 1:2. I don't use 1:1, because if I use 1:1, that simply means that you have to win what? 60 trades. You have to have at least 60% win rate. So if you're using 1:1, you have to win at least 6 out of 10, which is possible, because if you're using 1:1, it's very easy for you to win trades. Like I said, if you have a high RR, you have a low win rate. If you have a low RR, you have a higher win rate. That is just a typical. If you have a low RR, you have what? A higher win rate, because price will easily go to your take profits, right? One is 1:1, just a little move and you're in TP or VTP. So it's just up to you. But me, I like high IR, so I'm okay with having a low win rate. But if you cannot, you don't like losing too much trades, then you can go with 1:1, 1:1.5. But I recommend that you should use at least 1:2 because it puts the pressure off taking too much trade. Because if you're this 1:1, you have to be taking too much trades for you to be profitable. You have to be taking too much trades for you to win, for you to be profitable. Taking too much trades, right? But if you're using 30%, 40% win rate, and you're using high IR, just one trade has covered it for you. One win has covered, three losses. One win has covered two losses. That's the power of risk management. Very, very important that you use risk management when you're trading, right? It helps you to reduce. It helps you to um reduce the stress that comes when you take a loss. You're not under pressure because you know that all it takes is one win, right? Yeah, all it takes is one win. I've been in situations where I took four losses and I used one trade to win back all my losses and still make profits. So I'm not so bothered about my loss because I know that just one or two wins has covered it up. So I'm just focused on having my wins. I'm not focused on losing trades because I know that it's normal to lose trades, right? It's very normal. But if I can just stick to 1:2, 1:3, I'm okay. So on the long run, I'll be profitable, right? Just 1:2, 1:3, I'm okay. I don't need to stress myself with losses. So that is it. Always have a defined risk. Now, let me just put the final things. Now, final thoughts. For risk management to work for you, now this is the final thoughts. Now, you have to put seven. Number one, use a defined risk. So for a reason to work for you, use a defined risk per trade. Don't risk $10 today, risk 50 tomorrow, then let's risk 80. No, have a defined risk per trade because that's the only way that this is going to work for you. Imagine that you have a 30% win rate and you now do an over leverage. Let's assume that okay, you have a 30% win rate now. On the first trade, you lost what? You lost, let's say you lost five. Okay, now you lost on the first trade, you lost what? You lost let's say you lost $100 and then you now win what? 50, right? And then you now over leverage and now come and lose what 200. So you can say that although um you took one win and two losses, right? So although you took one win and two losses, you can say that the losses are so much because the win is not even able to cover one loss. So it's very important that when you're taking your trade, always make sure that you're risking you try to define the risk per trade. Don't randomize your risk, right? Make sure you're risking you have a defined risk plan, right? For me, I use a dynamic risk plan. That means when I am in drawdown, right, I reduce my risk by half. Or if I'm in profit, I go back to so I have a dynamic risk approach. So I use two risk, 0.5 or 1%. If I'm in profit, I go to my 1%. If I'm in that's for it depends on the valuation account or whatever. So if I'm in profit, I use my normal risk. If I'm in drawdown, I cut it by half. I cut my risk by half when I'm in drawdown. So that's how I do it. So yeah, I just have two risk when I'm in profit and when I'm in drawdown. So drawdown I cut down. Well, there's some people that use the same risk without drawdown and profit. So it's just up to you. If you want to use the same risk when you profit or drawdown, it's up to you. So it just depends on you. But make sure that your risk is not random, it's defined, right? And number two is that don't over trade because there's no point, having a risk when you're over trading, right? Don't over trade. Right? Over trading can it can reduce the impact of your risk management. If you're over trading, risk management is not going to help you because you're still going to be blowing your account even with risk management. So don't be over trading. Make sure that you're waiting for what a good setup, right? Focus on a plus setup, quality setups. So very important. Focus on what quality setups, right? Good trades. Trades are very clean, right? Wait for good trades, quality trades, because your team can work for you, right? And then avoid from if unless maybe you have a fundamental part, because there's some people that when they trade, they also incorporate fundamentals, right? They use fundamental to that their strategy is built on fundamentals. Unless your strategy is built on fundamentals, then you should avoid news because news will give you some losses that you did not plan to take. Maybe you plan to risk one arrow, you can end up getting a slippage, right, from the news and end up losing 4 arrow because of your slippage. So news can be very volatile and can negate your risk management. So even if you're risking $10, one news can turn that $10 loss to 50 or 40. So whenever you're taking trades, always be mindful of your risk management. Risk in a way that news does not affect it. So when you're taking your trades, Be mindful of news. Be mindful of news. Be mindful of news. Very important. Be very mindful of news events because it can negate your trading, right? Very important that you do that. And then finally, if you, for your risk management to work for you, like I said, you have to have what the second income source, right? So you don't, you don't become psychologically what impaired, right? So have a second income source. Because when you have second income source, you can be able to be patient, even in drawdown, even in losses. You're going to be very, very patient with yourself. You won't be over trading. You won't be forcing anything. You'll be very calm, like you'll be very calm and zen, like very calm. You don't, you not be under pressure because why? You have second income source. You're not under pressure. So that is very important. So if you enjoy this video, drop what you learned, right? And then just drop what you learned. And then finally tell me your risk, your tell me your R you use, how many R you use, and what's win rate do you need to be profitable. So just tell me the one you use. Do you use 2R or do you use 2.5 R, and what percentage win rate do you need to be profitable, right? For with your strategy, right? Or with your win rate. Right. So tell me about your win rate and then how many R you target on your trades, right? So have a wonderful day. See you tomorrow. Do what to like and subscribe. Have a wonderful day. Cheers and God bless.